Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. $5,800 a share for Tesla stock by 2026, according to ARK Invest. Now, that is their bull case, and their bear case is still $2,900 by 2026. In today's episode, we're going to look at ARK Invest's release of their 2026 prediction. Now, before we get into this, do me a favor, hit the like button, hit the subscribe button, ring that bell. If you want to help support the channel, you can find our Patreon link down below in the description. With that said, let's get into this. As you can see here, ARK's expected value for Tesla in 2026 is $4,600 per share. Let's review what they have done here. ARK's updated open source Tesla model yields an expected value per share $4,600 by 2026. We can see, let's just scroll down here. So expected value, so this is like their base case, is $4,600. Their bear case is $2,900, and their bull case is $5,800. So in other words, if you had 1,000 shares of Tesla, in the worst case scenario, 1,000 shares would equate to $2,900,000 in net worth of those 1,000 shares. That's the bear case. For the bull case, we'd be looking at $5,800,000. And again, 2026, like don't forget, we're in 2022 and we're already essentially halfway through 2022. So in a mere, 3.5 years, we'll be there? I mean, this is wild. So let's continue reading on this here, just to talk about some disclaimers they have here. So with the 4,600, they note this projection is our expected value for Tesla stock price in 2026 based on our Monte Carlo analysis. So the Monte Carlo analysis, if you're not familiar with it, go look it up. High level, what it is it's an X amount of inputs they put in. I believe ARK Invest uses about 16 different inputs, and essentially it's a simulation that runs over and over and over, right? And I think they run it like 10,000 times maybe. And they get all the data from that, right? And then it starts to chart out essentially what will look like a bell curve. You know what's very similar to, actually? It's very much like how Tesla does their path projection, right? Or how neural nets work. It's kind of very similar. If you've ever seen like one of those videos where they talk about how neural nets learn as far as like a vehicle trying to learn how to go around the track most efficiently, well, the first couple times it just goes off the track, right? But as it goes, as more simulations run, it starts to learn and it just keeps going over and over until it finally gets a perfect route. So the Monte Carlo kind of is similar like that, right? It's running all these different simulations. And then the idea is that we have this kind of the standard deviation range that tells us where we can predict the stock price to be based on all these inputs. So there's a lot of variables because every input can be changed and that can skew everything. And we'll talk about that more as we go along here. But it's important to know what ARK Invest is using in order to get these numbers. So their analysis is all based off of a Monte Carlo approach. All right, with that said, let's look at the bear case. They said, we believe that there is a 25% probability that Tesla could be worth $2,900 per share by 2026 and a 25% of $5,800. All right, so that's essentially your distribution, right? 25% is on the low end, 75% higher, so another 25% is on the high end. So essentially that's your distribution. And in the middle is where you can consider like your mean or your most probable. So pretty good. All right, so let's scroll down here. This research update is based on ARK's new open source Tesla model. You guys can check it out, click it, you can mess around with it, which incorporates distributions for 38 independent inputs to simulate a range of potential outcomes for the company. Okay, so excuse me, not 16, 38. Tesla's prospective Robo-taxi business line is a key driver, contributing to 60% of expected value and more than half of expected EBITDA in 2026. Across our simulation set, we expect electric vehicles to constitute 57% of the company's revenue in 2026, albeit at a substantially lower margin than the Robo-taxi revenue. All right, so essentially what they're saying is if you take, and this is based off the base case, off of that, come back up here, this $4,600 price target, right? So this $4,600 equates to, if you look here, this $5.3 trillion. Let me see if I can zoom in. Here we go. It equates to this $5.3 trillion market cap. But what they're saying here is that if we look at this from a revenue perspective, they still expect the electric vehicle segment to be the majority of the revenue. Okay, keep in mind, revenue is before we start looking at gross margins and before we start taking out expenses. However, as we look at the EBITDA with the same distribution here, EBITDA, we see that Robo-taxis is a much larger percentage, 54%. And then as we come over here, as far as what's the value for the business line, you can see, again, Robo-taxis just dominate this segment. So again, this is all from the perspective of that $4,000 stock price. Scrolling down, we can see some other examples of outputs from the bear and bull perspective. So 2021, this is actual numbers. So these are numbers that we already have. So we're going to compare this to the bear and bull case for 2026. So here you can see the assumptions that are being made by this Monte Carlo simulation. And so in 2021, just shy of 1 million vehicles, right? They're saying that bear case 2026 will be 10 million vehicles sold, and the bull case would be 17 million vehicles sold. Now, in order to get to 17 million by 2026, you would have to believe that there's a huge, change in manufacturing, right? I mean, right now, like if you were going to be very aggressive, you would say Berlin 2 million, Austin, call it 2.5 million. It gets you at 4.5. Say China is another 2 million. Okay, so that's 6.5 million. Say Fremont, say that gets to 1 million. So that's 7.5 million. Let's say they can build another, say 4 factories. Each of those factories can do 2 million. So that's another 8 million plus that 7.5. That's 15.5 million. I mean, this is how aggressive we'd have to be in order to get to 17 million vehicles. And that's assuming that these are vehicles being sold. These aren't robo-taxi fleets that Tesla's keeping for themselves either. So I mean, this would be extreme scale. Average selling price. So right now, average selling price is $49,000. The real average selling price as of last quarter was $52,000. Important to know that. In the bear case, the average selling price would be $38,000, and in the bull case, it'd be $30,000. Essentially, the scale that Tesla can get to, the more scale they get to, the lower the price can be. So that's why we see that $30,000 there. So here again, you can see the revenue, right? 513 versus 372. And here's where things kind of start to get a little different. Human-driven ride-hail revenue. So their assumption for the bear case is that assuming that Tesla doesn't, quote unquote, solve autonomous vehicles or get approval for robo-taxis, ARK's interpretation is that by 2026, this means that we'll have a marryment between autonomous vehicles and human oversight of those autonomous vehicles. It's actually one of the questions within say.com. I talked about it yesterday. Go vote. If you're a stockholder, you can vote. Just link your brokerage account. But one of the questions was, will Tesla consider essentially doing like a Chandler, Arizona or a San Fran or something in the suburb where they can actually go ahead and deploy a robo-taxi because it works really well in those areas. So it would be more for marketing, if anything, really. And to kind of just have that proof of concept, go ahead and start getting the regulatory approvals, navigating those waters. I mean, we already see Cruise and Waymo doing this, so it'd be cool to see Tesla do it because Tesla could do it at scale right now, right? Tesla could literally just do geofence in every suburban area in the entire country at this point. So anyways, assuming that Tesla does actually solve autonomous problems and we do get actual robo-taxis, ARK Invest anticipates $0 for any human-driven robo-taxi. So scrolling down here, and here you can see the big delta, right? So autonomous ride-hail revenue. In this case, 51 billion versus, $500 billion, right? That's what we're looking at here. So huge discrepancy. Electric vehicle gross margins, again, 46.34. We kind of already talked about that. All this is pretty much the same thing. But here's where you really start to see the difference. Market cap. So on the bear case, a $3.3 trillion company versus a $6.7 trillion company. And again, remember that base case, that $4,000 stock price, that was, $5.2 trillion company. So extremely bullish here, right? And again, here, $5,800, assuming we get onto the bull side. Again, the worst case scenario, $3,000. That means that in 3.5 years, we're at a 1 trillion. This would be like a 3x of where we're at in about 3.5 years. I mean, that's the bear case is nutty, right? It's just awesome. All right, let's scroll down. Key assumptions underlying the Tesla 2026 forecast. You can read into most of these, but the one I thought was the most interesting was down here. Robo-taxi launch date. So 2030, 2026, 2023, 2022. So let me zoom out a little bit here. So here you can see best case would be 2022. Upside standard deviation of one standard deviation up or down. You can see the years here, and then worst case scenario 2030. And you'll see how this carries out in a second. So here we have estimated total addressable market for autonomous ride hail by price segment. So if I scroll back up here, you can see, so taken together, ARC estimates the total addressable market for autonomous ride hailing at roughly 11 to 12 trillion as shown below. So how do they get to that number? Well, they do it based on how much you would charge for a robo-taxi on a per mile basis. So if we start off here, right, this orange one, this is 990 billion addressable ride share in Western markets, essentially replacing commuting miles and the price at $1 a mile. All right, so if you do the math right now about what people pay based on their card note, based on insurance, based on gas, based on maintenance, all of that, it's substantially more than $1. I think it's like $2.50 that people essentially spend on a per mile basis. At $1, oh, actually, look at this. Existing addressable market for ride hail companies with price $2 to $4 per mile. That's what it is right now. So like Uber or Lyft. But anyway, so what they're saying here is at this point, 990 billion or a $1 trillion total addressable market would be just from charging $1 a mile. So think about it. If you had to go to work and it's 10 miles away, you'd pay $10 to go there and come back. So not the cheapest thing, but if you do the math, it would actually be cheaper than owning a vehicle, gas, maintenance, insurance, etc. Now, 2.4 trillion non-commuting miles in higher income countries priced around 60 cents per mile. So the idea here is that let's say we drop that price and not commuting, just general usage of vehicle, right? If that was at 60 cents per mile, that adds another $2.4 trillion. So what's happening here? As the price goes down, you increase your total addressable market. It's just like the vehicle segment, right? At $50,000, $100,000 a vehicle, you don't have as many people that can afford that. However, if you have a $15,000, $20,000 vehicle, you have a huge total addressable market. There's more people that can afford that. So what they're saying is if we get down to 60 cents per mile, that adds 2.4 trillion on top of that 1 trillion. We go further down. If we look at 50 cents, you can see how this continues. And then 25 cents. 25 cents, we're looking at 5 trillion, low-cost, accessible, autonomous travel at 25 cents per mile. So again, this is how they get their 11 to 12 trillion. So what they're saying is there's a massive market here, all right, massive. And imagine if Tesla only got, say, 20%, 25%. Well, let's say that Cruise and Waymo and everybody else gets to the game, right? Let's say everybody gets, essentially, there's like 4 or 5 main players. So let's say everyone gets 20%. That's adding yet another trillion just in market cap there, or in total addressable market. So that's wild. We also have updated how the robotaxi business feeds into the model, reflecting our increased conviction in Tesla's ability to achieve full self-driving. The question is when? Whereas our previous downside cases assume that Tesla would never launch autonomous ride-hailing, our updated downside case assumes a launch in 2026, 4 years later than Elon Musk expects. All right, the rest of this you can read it if you want. But essentially, with the model they released last year, right, same as here, they had a bear, a base, and a bull case. What they're saying is last year for their bear case, they said, hey, Tesla never gets there. Tesla never gets to a robo-taxi. Now what they're saying, they have so much conviction in the progress Tesla's made that they're saying now our bear case isn't that Tesla doesn't get there. What they're saying is Tesla gets there in 2026. That's the bear case now. So if we scroll down, we can see this by year. So percent of simulations indicating first year of Tesla's robotaxi commercialization. Again, keep in mind, all of this is really dependent on all the inputs they put in and then the simulation runs. So you got to take all of this with a grain of salt, but it's still fun. All right, so look, there's a 10% chance that it happens this year, 2022. That's the robo-taxis. I do not think it happens this year. I think that Elon is right. I think that we will get to better than a human in 2022, level 4, whatever you want to call it. But I think after that, maybe 2023, maybe 2024, that's when they start developing the robo-taxi they've been talking about. And that's where they actually start, essentially checkmating everybody. So here we can see 2023, 16% chance of robo-taxis, 2024, 25%. So this is the most likely. And we can see here 2025, another 24, and then you can see how it just kind of goes down here. So in other words, if we do this math, there's a 91% chance, based on this model, a 91% chance that we will have robo-taxis by 2026. Bear case, 2026, robo-taxis. Think about that. All right, that's 3.5 years away. I keep doing the math in my head. 3.5 years away. All right, maybe you say 4, because maybe who knows when it happens in 2026. But that's right around the corner. I mean, that is not that far. And in that meantime, worst case scenario, you can still 3x your investment in Tesla. Like it just doesn't get better than that. Well, it does if it happens sooner. That's right. It can get better. So this was an interesting one. Capital efficiency, maximum annual production increase. So essentially, how is Tesla doing with the capital, the revenues they're getting, right? Like, how efficient are they being? And you can see here that, the efficiency, the green here is the historical. So 84,000 per unit of capacity. And you can see how that just is coming down, right? They're getting more efficient, more volume. They're doing more things, more investments, R&D, volume, et cetera, right? It keeps happening. So as Tesla expands, this number should continue to go down. Now, what ARK is calling for is that on the upside is that they get to $2,000 per unit, right? I mean, that's extreme efficiency. And again, you can see downside would be about 7,000, which is essentially where they're at right now. So you're essentially, with that downside, you're essentially saying that in the next 3.5, 4 years, Tesla does not get much better. Tesla does not scale that much. Tesla does not get much more efficient. Meanwhile, we have 2 brand new factories that are going to be even more efficient, even more revolutionary than what we had with Fremont or Shanghai. So, this is already wrong, in my opinion. We know we're going to get, better capital efficiency already. So this one was interesting. They have a little cursor here that you can move around, but probability density of scenarios mix over 2026 price targets at a max annual production increase. All right, what does that mean? Well, essentially, if we scroll down here before we look at the graph, we can make some sense of this. Tesla does not meaningfully sell into vertical integration ride hail, nor deliver on Robo-taxi in the prediction window, right? So they're saying the probability of this in relation to share price is what they're saying. So here, this gray box, you can see it right here. You can see this little sliver right here. That's what that's representing. Then we can see this darker green, right? And this darker green is saying Tesla incorporates vertically integrated ride hail, but doesn't deliver on Robo-taxi in the prediction window. So in that prediction window would be essentially the 2026 window, right? And so here you can see this graph right here, and look at that. It correlates with the same price targets. Here you can see essentially the high end coming down here. Tesla delivers on Robo-taxis in 2025 or 2026. That's this very light white line, right? We can see that right here. Look at this one. I mean, I got to zoom out. So this one comes all the way up here, right? So this seems highly likely. And you can see that as it happens, say, sooner, the stock price is higher. And again, we can see the same thing here for this purple and this darker green. Let's just go to this darker green. Tesla delivers on Robo-taxi before the end of 2023, right? That's where we come out here, and that's where we have some nutty numbers, right? This is essentially saying 2023, we could see anywhere from call it $4,000 to $14,000 stock price. So this, when you see stuff like this coming from ARK Invest, it makes you, at least me, for any of you who are part of my Patreon and have access to my models, you'll see why my price targets for 2022 aren't that crazy, especially when you see something like this. So this is pretty crazy. I mean, and then even then, like with Warren Redlick, he's adamant $100,000 of shares, what he's estimating. I mean, it starts to give it some credibility, that's for sure. So, forecast of 2026 share price. Our simulation is highly sensitive to the year in which Tesla launches Robo-taxis. So this can't be stressed enough. All of this, their whole simulation, at this point, they're saying Tesla's entire valuation is purely predicated on when Robo-taxis get launched. So we know that it's going to happen now, all right? We know because Elon hinted during Cyber Rodeo that they are working on a Robo-taxi, that it's going to look very futuristic. We now know that NHTSA has essentially approved the ability for vehicles to be made and used without any steering wheels or pedals, so that's promising. We see things happening with side view mirrors, going to camera. I mean, there's a lot of stuff happening, and it seems like government and regulations actually on the side of innovation at this point. I know we get a lot of FUD regards Tesla and Missy Cummings and all them, but the truth is, it seems like companies like Cruise and Waymo may be the best thing for Tesla because they're kind of paving the road for all this, right? Waymo's already doing driverless operations in Phoenix, albeit in a very, very small surface area. You also see it with Cruise, again, albeit in a very small surface area with very short window times. But the point is they're paving the path for Tesla to be able to come in behind them and just use the path that they've already trailed with regulators, and Tesla can just continue to plow through at scale, right? And that's going to be the biggest difference between Tesla and everybody else is the scale of this. So here's another interesting one. This is example 20. This is a example for 2026 scenario. You can see a 2026 price per share at 983. That's like at the very low. That's assuming 7% Tesla does not meaningfully sell a vertically integrated ride hail. But if I move this cursor, watch what happens. So if I start to move this, let's say there's a 20% chance Tesla delivers on Robo-taxi in 2024. All of a sudden we get up to a $3,000 price target. If I continue to move this up, let's say there's a 38% chance that they do it by 2024, a 32% chance by 2025, 2026, and we can see a share price about $5,000, right? And again, if you have 1,000 shares, that'd be $5 million. I mean, that's just the easy math of it. So feel free to go in, play with this. I mean, like if you really want to get nutty, this says if they do it by 2023, we're looking at $12,000 a share, or in other words, $12 million if you had 1,000 shares. So I thought that was pretty fun that they added that in. Now, here's some things that are very important to assume. When it comes to Tesla insurance and Bitcoin, what they've said is that we've accounted for it, but it's not really meaningful to the model at all. So insurance increased our 2026 market capitalization estimated by roughly 2%, so meaningless. And same with the Bitcoin holdings, right? They're saying Bitcoin increased our 2026 expected price per share by less than 5%. So these aren't real meaningful things within their model. Coming on down here further, business opportunities not included in the model. So this was interesting. We'll start with Tesla Energy. So they essentially took Tesla Energy out of it. And what their logic was that Tesla's going to be so battery constrained that Tesla will choose to bias batteries towards vehicles. And what this means is that they won't be able to really scale and ramp up the energy side. So as robo-taxis come to life, as the vehicles get sold in mass, so 10, 15, 20 million vehicles a year, what they're saying is that the energy business, even if it grows, it's going to be so minuscule compared to robo-taxis and the actual electric vehicles being sold that the energy business will be kind of irrelevant. Not saying that it'll never grow up and become as big as the electric vehicle company, but it's just not its time right now, right? Those batteries are going to be more biased towards the actual vehicles. And I personally don't really agree with this. Scrolling on down here, AI as a service, same kind of thing. I hold less weight with AI as a service. When I first read this, I wasn't sure what they were talking about until I read it. And what they're referring to is Dojo. So essentially think AWS or Azure or GCP, right? Public cloud, renting out space. Imagine that, but for neural nets. And that's the idea of Dojo. At least that's ARK's idea of it. And this was hinted during Tesla's AI day. But I don't see this coming to fruition. Now, if they would have said AI as a service, in other words, the humanoids, which we'll talk about in a second here, that I could see, right? Imagine you bought a Tesla bot or Optimus, and you pay, say, $200 a month to have it. Okay, so that costs you, $200 a month, but maybe you want a new feature. Maybe you don't have the feature that allows it to fold laundry. All right, well, I'll pay extra $2 so I can have the folding laundry feature. Oh, well, I wanted to make this new recipe that I've want to try, and you can buy the ability for your bot to make that recipe for another $1 a month, right? Like if you could do something like that, I see that AI as a service almost. But that's at least where my mind was thinking. Now, humanoid robot. Tesla could bootstrap its learnings from factory automation and autonomous driving, becoming one of the first and few companies to develop foundation models for more generalized AI capabilities, embedding them in Optimus in a humanoid robot. The financial impact of the initiative most likely falls outside our 5-year model window. Again, ARK Invest sticks and adheres by this 5-year model window. So what they're saying is that, yes, maybe a humanoid prototype comes out at the end of this year. Maybe they get into somewhat meaningful volume production at the end of next year. But what she's really saying is that this doesn't go scale for another 5 years. And so they're not inputting that into their spreadsheets. Now, it doesn't mean it can't, right? That's more of just an extra call option. Same with the insurance, same with energy, right? All those are more call options with Tesla. So Tesla 2026 and beyond, I thought this one was kind of awesome to read. So although they adhere to this 5-year prediction, they went ahead and modeled out over the next, what did they go out to? Out to 2030. So let me read this first. I mean, you probably already saw it there, but let me read this to you. Although tuned to our expectations for 2026, so in other words, they turn the knobs, they put the inputs based on 2026 price target, not 2030, we believe our Tesla model is conservative. We assume that Tesla stock will trade like a mature company rather than a high growth one in 2026. The terminal multiple used in ARK's model is probably too low relative to Tesla's likely growth in 2026, a conservative modeling practice at ARK. As a result, share price expectations are highly sensitive to the year of the price target. Using the existing assumptions in our model and extending them out to 2027 results in a materially higher price target and compounded annual rate of return. As shown below, this effect persists if we extend the model to 2030. That said, we have not tuned our models explicitly for that time horizon, raising the risk for potential errors. For example, by 2030, vehicles form factors could change significantly relative to those in our current model, and some of the business opportunities we have not modeled, such as AI as a service, could be more meaningful contributors to Tesla's financials. So, what is she saying there? A lot of words. What she's saying is, first of all, this model is not tuned to go out to 2030, right? There's a lot of different things, like it assumes a certain CAGR or compound annual growth rate, right? And who knows, like by 2026, like maybe the company's so big that it's not growing at that rate. But she also makes note that the model that they're extrapolating out to 2030 does not include Tesla AI as a service, Dojo, does not include the humanoids, doesn't really include energy actually growing up and becoming as big as the electric vehicle companies. She also notes that maybe vehicles won't be what they are right now. In 2022, we see a Model S, Model X, Model 3, Y. But by 2030, maybe Tesla stops selling vehicles altogether. Maybe they just do robo-taxis. That could be a thing, right? Maybe our whole world changes and it's almost archaic to own a vehicle. That is highly possible. So all this could be changed. So she just wanted to put this big asterisk, big disclaimer saying, hey, this model is not meant for this. Things could change. However, don't forget, all these call options do exist. So with all that said, let's look at these numbers. So if we have a compound annual growth rate, 2026 is 46%, 52, 54, 52, 47, right? So this is to 2030. By 2030, we'd be looking at over $20,000 per share. Let's take that back to my $1,000 share example. That means $20 million is what you would have between 2022 and 2030. In 8 years, you'd essentially be able to 20x your money. Insane, nutty, crazy. That's pretty much the entire model here. Feel free to go back and look at this yourself. I read through all of this. Very interesting stuff. You can go in, you can play with the model, you can move those dials, you can put your inputs in and see what makes sense for you. I highly encourage everybody to have their own models. Again, if you want, you can go onto my Patreon. You can sign up for a certain level, and you could download my model if you want to use it as a template. But what I've learned over my years of investing is that if you can't model out what you're invested in, then you may not actually understand how the company's working. So highly recommend, if you're investing in Tesla, or if you're investing in anything, have your models, be able to understand your models, because again, if you can't put it onto an Excel sheet, then do you really understand what you're investing in? And don't forget, we work hard for our money. So it's not something we should just be throwing away. All right. I hope you guys enjoyed this episode. I was very excited about this. I know I said that I was going to do a analysis of what I thought from Elon's TED Talk, but this came out late last night. I got up this morning at about 4 a.m. and I just started reading through this and just, picking it apart, just trying to figure out what was actually being said here. It took me a couple times to read through this to really understand everything. So again, I just went through it, but I highly recommend you go back and take your time, go through it. It's very interesting stuff. A lot of assumptions being made, but Cathie Wood has been right before. She's been doing this for a long time. And, I wouldn't be betting against her just like I would never bet against Elon. All right, we're going to leave it there. Appreciate it if you stuck to the end. Do me a favor, hit the like button, hit the subscribe button, ring that bell. Don't forget you can find my Patreon link down below. I love you all. Peace.